Hi, this is Ed the Finance Guy. I'm glad you tuned in. Thanks very much for joining. So today's topic I want to discuss, and this again is educational, nothing against any particular company, but I've been asked a lot about this company called Robinhood. And to be honest, I was a broker for 25 years. I had my own brokerage firm. I never heard of Robinhood. I didn't know anything about it. So this educational channel got me to be researching something and learning something about another company. So when I reviewed it, I wanted to see what kind of company is it. Is it a scam? Is it a real company? Is it safe? It was founded in 2013, not that long ago, and it's geared mainly towards millennials, 23 to 33-year-olds. They added cryptocurrency in 2018. They added Bitcoin, Litecoin. So they wanted to make sure they attract the younger people, and they want more and more investors, and they've done amazingly well. They've got many new accounts over the last few years, especially during this time when people are home, they're not working, they're trying to make some money in the market, they're trading. And again, it's an app, so they cut the expenses. They don't have to pay rent. They don't have to have secretaries. They don't have to have insurance. Their expenses are low. The benefit to this company that I see, they say there's no commissions, commission free, but we're gonna get into that a little bit later. The real advantage I think, or that I like, is that you can buy fractional shares. So Google, for example, is $1,450 a share as of yesterday. Tesla is $1,000 a share. To buy 10 shares is $10,000 of Tesla. So if you wanna get involved in that company, you think it's a good product that they sell, you like the fact that there are electric cars and you don't need gas for your car, but you really can't afford to get into that type of a stock, $1,000 a share. You could put $100 in, you could put $5 in, you could put $10 in, and you could buy fractional shares. And when I had my brokerage firm, there was no such thing. You couldn't buy fractional shares, you had to buy whole shares. So that's one really, really good advantage to Robinhood. Now, when I say technically it's commission free, there are things about this company that I don't like, and it's my own opinion. I don't have any facts to prove it. There's certain things about it I don't like. So the question is, how do they really make money? I mean, they have people working for them, they have staff, they do have some expenses. How could they charge zero commission on a trade that I normally would pay $100 commission for? So the first thing they do is they lend out idle cash to people. So if you have $10,000 in your account, you bought $3,000 worth of stock, you have $7,000 extra money in a money market account. They take that money and they lend it out to other people at a higher interest rate. So that's one of the main ways they make money. But the second way they make money is the way I'm not too crazy about. They get paid on what's called order flow. So when I had a brokerage firm and I wanted to buy a stock, I would call up a market maker, and that market maker would buy the stock for me, and then they would get a commission based on whatever they did for me. So I bought 1,000 shares of a stock, they put the trade through, they would make a few pennies on the shares, and that's how they make money. So they get a kickback on that money from order flow. And what I don't like about it is, if they're dealing with a third party and they know that you're gonna be buying 10,000 shares of something, I'm always afraid that they're buying 1,000 shares for themselves. Then they're putting in the 10,000 share order, which is driving the price of their 1,000 shares up. And that's called front running. So the practice of front running is an illegal practice. I'm not saying that they do it, but the potential for the market makers to do that or for Robinhood to do that and share in the profit is always there. So I'm not too crazy about that. The other way they make money is on margin. So if you wanted to buy stock and you put $10,000 in your account, you're able to buy $20,000 worth of stock. So you're able to buy stock with the $10,000 you put in, plus you could borrow against it, and you're gonna pay what's called margin interest. So if I really like a company, I could buy $20,000 worth of stock and I could put $10,000 in my account. I'm borrowing $10,000 more to buy that stock. That's margin interest. And of course, it's a very risky thing to do because literally you're playing with money you don't have. So if the stock happens to go down a lot, you could end up losing all your investment pretty easily. And if it went down really quickly, you could lose more than your investment and have to come up with money. And that would be called a margin call. You'd have to come up with additional money over and above the money you wanted to play with. So it's not something I advise people doing, but people, they like to gamble. And especially now without sports betting, casinos, a lot of the younger people, they're trying to make some quick money. They think it's easy to make money. And this is the type of app that feeds into that addiction where people have to gamble right now. Now, the company ran into some problems. In December 2018, they had outages. So you would go on your app and you'd want to buy or sell something, stock's going down, you're trying to sell it, or the stock's going up, you're trying to buy it, and it says account deactivated. So they had that problem and it lasted, I think, a full day, and people weren't able to buy or sell, which is very upsetting. Of course, that could happen with other sites too. You're not guaranteed that that wouldn't happen on a different site. I can't completely blame them for that problem. In July of 19, they lost a lot of passwords that were breached. That I can blame them for. That all the passwords that they had for their clients were stolen, and everyone had to change their password, and people did lose money. In 2019, Robinhood offered checking accounts and savings accounts, and they said it was protected by SIPC. SIPC is Securities Investor Protection, and it guarantees the money that's in a brokerage account. It doesn't guarantee that you're not going to lose money trading. It just guarantees that if the company that you're with goes out of business, you're going to get your money back. It's kind of like at the bank. You have FDIC insurance. So if the bank goes out of business, you have $10,000 in the account, you're going to get your money back. So that insurance, SIPC, is what they claim to have. They marketed it that way, and in reality, they didn't have the insurance. So as soon as that all came out, they stopped marketing the fact that they have SIPC. Now I believe they do have it, so that's one good thing. They've also been if you look online, there's many complaints about the company regarding customer assistance. But again, you get what you pay for. If you're buying something, you're not paying commission, you're paying less than you should be paying, you're not going to get the great customer assistance that you really want. So I looked at it online thinking maybe it's people that lost money, they're sore, they're upset about the fact that they lost money, so they're writing something negative. It's very easy to write a negative comment. When you're happy about something, you don't bother writing anything. When you're upset, you write something. So again, I'm not going to completely blame them for it. The only problem that I have, besides the front-running possibility, is they're letting people buy stock that don't have the education, that aren't familiar with the product, especially options. Options are when you have the right to buy a stock at a higher price. For example, Disney right now is at, let's say, $100. I buy an option in Disney to buy the stock at $105 3 months from now. So if the stock goes to $150, I could buy it for $105. So I trade the option and I make money. But if the stock goes down, I could lose my entire investment. So when you buy a stock, there's a good chance you're not going to lose your whole investment. You'll lose 10%, 20%. It's a good chance you're not going to lose everything. But with an option, there's a good chance you will. And when I had my own brokerage firm, I would always make sure that someone had at least 5 years worth of experience, because this is something that it's one of the biggest gambles that you can make besides commodities. Now, recently there was a 20-year-old, it was in the papers, he committed suicide when he looked at his statement and he saw he was down $700,000. Now, he's 20 years old, he's trading options. The fact that it showed that he was negative $700,000 was incorrect because trades didn't settle. He didn't even have $700,000 to lose. So when you're trading this type of an investment, options, and not having the experience, he looked online, he saw he was down all this money, he got all upset and he killed himself. And Robinhood put aside money for suicide prevention, but in reality, there should be some kind of a warning on their site saying that these investments are risky, you shouldn't be involved unless you've been doing this for years, make sure it's money you could afford to lose. And Robinhood doesn't do things like that. They don't put any kind of warnings. If you look at their site, the front page shows what stock has traded a lot recently. So that means they're getting people to look at the stocks that traded recently and possibly buy those stocks. And one of the stocks they had on there was Hertz Rent-A-Car. Hertz Rent-A-Car filed for bankruptcy. There's no way in the world you're going to make money buying a stock that filed for bankruptcy. The investors in the company are not going to be the first people getting paid. They're going to pay their taxes. There's a certain line of events of who gets paid first. They never should have posted Hertz as being a very popular stock to get people involved with the stock, which leads me to believe that maybe they own stock themselves and they're trying to sell it into the market. So they need people to buy the stock in order for them to be able to sell the stock. So these type things bother me about the company. Again, I'm not saying they're doing these things. I'm saying the possibility is there that they could do these things. But there should have been some kind of a warning that you shouldn't buy Hertz. We don't recommend you buying Hertz. The company filed for bankruptcy, and they didn't do that. Day trading stocks, options, very risky. You're buying a stock because you feel like in the long term, the stock's going to do well. They have a new product that's coming out. Their earnings are going to go up. There's a reason to buy a stock. When you buy a stock today and sell it today, you're just taking a shot. You're just betting on black or red roulette. You're really not looking at anything in particular to decide if you want to buy it or not buy it. Maybe you see a lot of people buying it, so you want to jump in. Not the right way to invest. The better way to invest is to hold a stock a period of time, to go through an earnings period that you think the company's doing well. You like a product, you like Home Depot. I want to buy Home Depot because I know people are going there a lot during the pandemic. I'll hold it for a quarter or two. I'll see what the earnings are. I'll sell it. I'll make a profit. But day trading is straight gambling, and it should be with money that you could afford to lose. And again, during this time right now, people are trying to figure out any way to make money. I would rather than take money and decide to open some type of a business, come up with some idea, think of a way that they can make money with the money they have instead of throwing it away. Because it's case money. You can't afford to lose it, especially if you're young, you're not working. It's not money you could afford to risk. You're collecting unemployment, you shouldn't be gambling that money away. The thing that I wish Robinhood would do is I wish they would offer online classes for free to teach people about how to read a financial statement, how to read a balance sheet. How do I know the stock's going to go up? What's earnings per share mean? There should be some kind of a class online that they could teach people how they should trade. What's the stock about? Why is the market up, down? Why is it moving? What's going on? What are the Dow Industrials? Are they 30 stocks or are they all the stocks? The market went up 50 points. How come I lost money? There should be some kind of a program that they develop on their site teaching people how to invest, the right way to invest. They should really take the time to help their investors. They have more people are enrolling in Robinhood than any other brokerage firm. So that's what I'm hoping that they do, that they learn from this and they try to teach people. Again, my email is ed1959@usa.com. I appreciate you listening. Remember, knowledge is power. I want everyone to be safe, be smart, and have a great day. Thanks again. This is Ed the Finance Guy.